What is up, guys? This is Angel here, and I welcome you guys back to another video. Today we're going to be talking about moving average and how I use them on my charts and on my trading strategy. So let's get into this. Alright, so I'm going to be showing you guys my MA settings. So right now I use the 66 MA, and I also have it under as SMA, which is simple moving average. So if you guys want to take a picture of this or want to save it to your charts, you're more than welcome to. So before we go into the gist of all this and we get into the charts and I talk to you guys how I use my MAs and everything like that, let's actually talk about what it actually means, moving average. What is a moving average? Well, in technical analysis, moving average helps smooth out daily price movements to help establish a trend in price by creating a constantly updated average. Basically, in other words, moving average will be the calculated results that smooths out price fluctuations to reveal the overall trend of that particular market or asset. So you may be asking, how a moving average works? Well, a moving average are calculated to identify the trend directions of an asset or to determine its support and resistance levels. It is a trend following or lagging indicator because it's based on past prices. So let's get back to the charts. That way I can show you guys how I use the moving averages. So as you guys can see, this is the 66 MA that I use for my trading strategy. So when it comes to moving average, I use it in multiple ways. One of them would be time frame correlations, which I'm going to be showing you guys in a minute. Other one would be when I use it as a support and resistance, and as well as to identify the overall trend, which is what I basically use it for more. But if you guys can see, I'm going to the monthly time frame, and this is going to be the MA, right? The M66 MA, and the price action above right now is going to be above the MA, meaning that is telling me that the market is overall bullish. So whenever the price action is above MA, it's bullish, and that's going to go vice versa as well. But in this case, since the price action is above MA, we're overall bullish. And whenever the price is below the MA, it's telling me that the overall trend is bearish. So for example, let's go to the weekly time frame. We see that the price action right now, the price where the market is below the MA, meaning that this time frame specifically, we're bearish. That doesn't mean the overall trend we're bearish, but right now in that specific time frame it is. So, and if we go, like for example, on the monthly, you can see the difference of how it's bullish. It can be a little bit confusing because, as you can see on the monthly time frame, we see that the market is overall bullish because the price action is above the moving average. But if you go to the weekly, price action is above the moving average, meaning that it's showing us bearish momentum. But if you go to the daily, it's showing us bullish momentum. And that could be because either the price action was bearish and now it's switching over to bullish. That could happen a lot. And also I go with the overall, so I use the moving average as a confluence, but that's not the only confluence I need. I have to see where structure is at. Structure is a very big part that I align with moving average, because if structure doesn't coordinate with moving average, then I really don't use it a lot. So let's say, and also another thing would be, let's say the moving average of each time frames, there's like from all the time frames that I look at, like the monthly, the weekly, the daily, H4, and so on. If there's, out of all those time frames, the majority of the time frames are overall bullish, showing bullish momentum than bearish momentum based off the MA, then I'm gonna be leaning more towards that the market is more bullish. Like for example, the monthly is showing bullish, the weekly is showing bearish. If you go to the daily, it's showing bullish. Why? Because market price action right now is above MA. So you can see we broke right here, and you can see as well that the line is going upwards. It's not going downwards. It's going upwards. So we can go to the H4, is bullish as well. And if we go to the H1, should be bullish, and so on. Perhaps When I go to the lower time frames and I use MAs, I don't really go based off the overall trend, because the lower time frames, they break a lot. There's a lot of break of structure. There's a lot of change of trends, especially when the market on the overall time frame, on the higher time frames, like right now on the daily, we're overall bullish. Right now, the pair is USD JPY, and overall we're bullish. But if we go to the lower time frames, like on the M30 here, we're bullish, yes, but the M15, we're bearish, meaning that right now we are retracing. We are making a market correction, so we're making that lower high. We're trying to make that lower high. That way we can create that lower high and continue to go and make that next higher high and continue with the overall bullish trend that is showing on the higher time frames. So that's basically how I use MA as well, and that comes along with market correlation. Market correlation is very important, especially in trading, because it lets you know where you are on the market. You're not lost. You know which each time frame that you go on, you know what is going on. You know why it's like that. You know why it's breaking structure on that time frame, but on the higher time frame, it's not breaking structure. So you know, right? So it's very important to use the MA and align it with the overall trend, with the overall structure, with other confluences, that could help you out in the overall case of that trade opportunity, right? So you can take advantage of it and take trades. So it's very important when it comes to that. So as you can see on the M5 as well, you see that the market is bearish as well. We're respecting this bearish MA. As you can see, every time it hits the MA, it's acting as a level of resistance. And if it was over here, it was acting as a level of support. It was acting as a level of support. So that's basically how you use the MA as well, as far as when it comes to levels of support or levels of resistance. If we go to the H4, let me find another opportunity here. So as you can see on the H4, on this area right here, let me see if I can. So I highlighted it for you guys right there. So on this area, as you can see, we broke that level of MA, and then we broke it once again. So as you see, once we broke it once again, you see that we respected levels of the MA, respected as a level of support multiple times. Respected here, respected on this wick, and it came up, it almost respected it here, and then we broke, and then it respected as a level of resistance. So it respects it a lot as a level of resistance and support. Where I'm trying to get at, you guys, is that I use it more, the moving average, I use it more on the higher time frames as a level of the overall trend, identifying what the overall trend will be, identifying where we are on the market as well. So it's very important, moving average, having it on that chart. So it's very important to have the moving average on your chart, especially the one that I have. I used to have two MAs back then, but I'm not going to be talking about it because it's a little bit more complicated, and I can make another video for that, but I don't use that strategy no more. I evolved it into using this only MA 66, which it has worked out for me now for a year now. I have been making consistent trades, consistent profitable trades, so it's been working out for me very good. And it's more simple on the chart. Like, it's a lot easier to look at the charts. It looks more professional, looks more simple, because at the end of the day, I like simplicity. I have this MA because it helps me out, but if I didn't help me out, I wouldn't have it at all. I would just go based off of price action overall, because what will be king is price action and structure, especially structure, because remember, this MA is lagging. this MA is a lag indicator, meaning that it's not with current price action, it's past prices. So the best thing right now as well to correlate with that MA would be structure. As you can see, if we're going based off structure, we're bullish, and we know that we're bullish because we're creating higher lows right here. Let me grab my tool. We're creating higher lows right here, higher lows, higher lows. You know, we're creating multiple levels of higher lows. We're creating multiple breaks of structure, especially here. This level of resistance we broke, and we came up down here and acted as level of support and created a higher low and created a higher high. Now we're at a level of resistance right here that we broke, and this might be a next level high probability area that the market can come down and make that level of support. And if we go to the lower time frames, especially on H1, like a potential trade that I would be looking would be this area, because it was a level of resistance. Now it broke, and now it becomes a level of support. Well, it doesn't become, there's a high probability that it will become a level of support. And as you can see, the MA keeps on getting closer and closer. So let's say a good confluence, a good trade opportunity that I could use right now, or that could happen, right? There is a possibility that could happen, and I've seen it happen before, but it might not be for this situation, but it could happen later on, is that like right now we're on a retracement, so we're waiting on a level of higher low to be made. So a level of high probability that I could see that would be on this area right here, and as you can see, the H1 MA is getting closer to that area, meaning that once it gets to that, it can get to that area, and once it gets to that area, the price action keeps on going down and down and down until it reaches and meets those areas, and that gives you confluence if it respects it. If it respects this area, it's going to give you confluence, meaning that if the market respects this area, we will go on the lower time frames to look at more confluence to see if there's a break of structure for it with that will, you know, align with that overall trend, which is bullish at this current stage. If there's a bullish engulfings, if there's higher lows going, making on the lower time frames as well. So, you know, looking for those candlestick patterns, and then that would give you confluence to take that trade and have the trade, you know, go to your TP. So that's one way how you can see how I use the MAs as a level of confluence or a level of support or resistance when I'm taking my overall trades. So I use it as confluence as well. So it's very important to have all those all that in mind and know how to use them, because it's very important, because you may know what it is, but you might not know how to use them. So the most important thing is how to use your moving average to your advantage to take those trades, you know, to take those opportunities, so that way you can make profit out of them, you know. So that's basically it, guys. I hope you guys enjoy, and I hope you guys stay to the end of the video. And if you guys did, please leave a like down below and leave a comment down below what content you guys want to see more. And I hope you guys enjoy your rest of your day, and peace out.